Is it time to sell first and ask questions later? Well, this pattern says yes, a very strong yes, because nothing good has happened when it's played out. We've been able to shake it off once. And if we can't do it a second time, a correction might be here or a back test to our previous tops. So you might be wondering, what is a bearish engulfing candle? Well, it basically means it's a topping pattern where we go down. And that's exactly what happened here. And this comes when we have levels we want to be receptive to. 6% was the minimum drop, 15.5% was the average drop, and we had 4 of them when we were going higher over the key averages, and we currently have 4. So is this time different? Well, hope is not a strategy. So we're going to give you exactly what you need to know to get prepared for the week ahead. We've already gone through and talked about a number of warnings leading into here, and might not be a surprise, but now we have even more. We're going to talk about those today. So warnings are definitely happening. Now we're getting confirmation. And it's not just me that's noticing this. Fearless stock bulls start hedging as Fed policy pivots stall. So what does this mean? A bumpy week for the S&P prompted long complacent traders to look at hedges they've ignored for months. Yes, that's exactly what they did. We know this story as one of continued strength. But as everyone knows, at a certain point, we go sideways and maybe even down. So this weekend, we have a lot of weekly engulfing candles for a lot of different ETFs, giving us multiple warnings. And look at what was down this week. It's a lot of the momentum names, but there's some names in here that surprised me too. If we look to what gained this week, well, volatility. That's the article we just talked about. VIX has hit a level that we've not seen in months. It's up by 23% on the month. Silver's up by 10. Copper's up by 5. The 10-year note's up almost by 5. This is getting incredible. And we have a really important data point coming out on Wednesday at 8:30 a.m., which is going to be CPI. Make sure you watch until the end because I'm going to show you exactly what that means. And I got a lot, but I want to make today's video really simple. So the story of this week is really a reacceleration. Look at the GDP now from St. Louis Fed. Q4 versus Q1, we see that we're actually expanding. If we look to the labor market, man, this is a red hot labor market. Unemployment went down and we added 300,000 jobs. The US is exceptional. Look to Canada. We got 6.1% unemployment. The US is the envy of the world. And this week, we have earnings kicking off on Friday. So wherever we close this next week is going to really matter. And I'll give you a quick little preview as to the reason why. I'll just pick one here at random. So we have this bearish engulfing candle. By closing below the low for a second week, what happens? That's the bear market. I'm not saying I'm looking for a bear market. But what I would look for would be confirmation by having a red week this week. It's also really important because I note here that if we close red next week, QQQ will also be closing below the 50 DMA or the short-term price. And there's nothing good that happens below the short-term price. So when earnings kick off on Friday, are we going to get more continuation lower? Are we going to start a corrective wave? Or are we going to shake it off like we did last time and be able to continue the rally? Make sure you watch until the end, like I said. So what this means is that American exceptionalism is on display in the bond market. Are we going to see that same thing when when earnings start kicking off on Friday? Because we note that inflation is coming down. Unemployment rate is going up. Non-farm payroll is going up and GDP is going up. So the companies that sell stuff, meaning the economy, it should probably do well. Should probably do well does not mean it will do well. So is this going to be a bump in the road before we go higher? Well, I think we're going to find out. I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up or subscribing to the channel, I would really, really appreciate that. Thank you for your support ahead of time. So the S&P's benchmark drawdown or decline from market highs has been just 1.7% so far this year, a record low. So that's the story of continued strength we've talked about. Thought a different way, the S&P with the most record days since 2017. Whoa, this is like a red hot market, red hot labor market, red hot economy. But the bull market breaks its stride with the S&P's first 2% dip in a long while. Thought a different way. The Dow closes 300 points higher in Friday, rebound, but registers worst week in 2024. So are we going to see more weakness? Well, I think part of this can be related to what the Fed said this week, but honestly, we're still at over 50% for the odds of a June rate cut. So now the Fed has maximum optionality. If they do cut or don't cut, the market will be less surprised. And that data point we talked about coming up this week on Wednesday, I think is going to be really important. Have a look here. Down on a month over month, down on a month over month, but up on the year. So what's going to cause that? I'll show you in 1 second. But this will also really matter because we get the Fed meeting minutes on Wednesday at 2 p.m. And we heard a lot of Fed speak this week. So Kashkari came and said that, hey, I said 2 for this year, but now it's 0. What did the Fed actually say in the last meeting minutes? Because they're telling us they're ready for 3 cuts this year. The market's now basically pricing in 2. And then on Thursday, we got PPI or producer price index. This was a good clue that inflation was going to go up. So is this going to be a clue what's going to go down? And it's also going to be into the later part of the week as we go into earnings. So if we close out, if we have the first half of the week that's weak, and then we rally up on earnings, rally up on PPI, that would be exactly what the bulls want to see. All right, now let's talk about this data because US CPI is what I think the market's going to be focused on. First thing I want to point out is that the last 3 numbers have been revised higher, 3.4, right? These were beats, and the market shook it off. So how can we go up to 3.4 right now when the month over month is going down? Well, that's pretty easy to find out here because we go back 12 data points, and we're going to be removing this data point, which is at 0.1, and we're going to be adding one at 0.3, which means it's going to go up. The number will look better when we remove the 0.4 for May, but what I'm noting here, and again, this does not give me warm, fuzzy feelings. I see a high, higher high, higher high, higher high. I see a staircase being built here. That's a reacceleration in inflation, just like we're seeing for jobs, and we're also seeing for GDP. Okay, so is the market going to shake it off? Is that 3.4 going to say, whatever, month over month is flat. It's okay if we go up this 1 month. I don't know. We'll see what people say. And if we look here to the CFTC net short positionings, they're actually covering. They're below 100,000 for the first time in quite some time. So as we're down slightly red on the week, the pain trade appears to be too much for these bears. They're covering, they're getting out. Here's the key levels for this week if you're interested. And then we also talked about this being not higher for longer, but being stronger for longer. Stronger dollar, stronger yields, stronger economy, stronger jobs. Yep, that pretty much seems to be the story right now. So when earnings kick off later this week, one of the biggest losers has been Tesla. And there appears to be some hype coming out because they've said they're going to announce the robotaxi on August 8th. Reuters is not so impressed here, though. Tesla's bet on robotaxis is a long way from paying off. So what does that mean? When earnings kick off and we hear Elon Musk talk on the conference call, that's what's going to matter. But he appears to be trying to jump on the hype train. Why? Man, he desperately needs it. Look at year to date. Look at 1 year ago. Man, one of the only red blocks. Look at look at year to date. It's down by 34%. And I'm guessing that Elon's ego got a little bit bruised because Zuck actually is now richer than Elon. They don't have to fight in the octagon to know who's better. Meta is worth more than Tesla right now. Zuckerberg is becoming super rich. Okay, so this bearish engulfing pattern with the potential that if it plays out, we shook it off once, we can definitely shake it off twice. But if we just drop 6%, that's not good. It means we're going to have a start of a dip, maybe even a correction. Okay, so you warned me with a lot of things, but now tell me what we want to look for this week. It's exactly what I just talked about. If QQQ has a bearish engulfing candle this week, and we also close red next week, that's pretty much a nail in the coffin. I think we're going to go down because it's not just the NASDAQ, which looks weak. It's ES, NQ, RTY. That's the Russell, the Dow Jones, the DAX, the dollar, QQQ, chips, tech, Germany, Brazil, Microsoft, Meta, AMD, and fear and greed. Fear and greed had a huge whipsaw this week. What happened? Man, just on Thursday, we were at 48, bounced right back to 61. Man, this market's getting volatile. Yes. And as we alluded to, that's because fearless stock market bulls are starting to hedge, something they ignored for months. Why? Continued strength got more continued strength, and the bears paid the price. Okay, so I've gone through the most important parts for the show today. As we note here too, I'm gonna follow up on these a little bit later in the week. We have some key dates, as I alluded to. We're gonna talk about the first important data point coming out on Wednesday, then Thursday. Sorry, on Wednesday again, and then on Thursday and Friday we kick off earnings with banks. So what I want to do next is just briefly touch on what this means right here. Bitcoin leading indicator. It got rejected this week at 69,000 or the previous all-time high. If QQQ does the same this week, we're going to be below the all-time high. So what that basically means is let's look at a couple of patterns here because you're like, okay, well, you're talking this big bearish game. Show me what it means though. All right. Well, if we look here to XLK or mega caps, this bearish engulfing candle just basically means that we're starting to stall out. If we look at this a different way or a 30-day chart, we can see that, let's just go back up to the top of the list. So S&P, it's already going sideways because a 30-day candle just pulls the previous 30 days. We're already going sideways. The NASDAQ, sideways. Okay, let's jump down to some ETFs here. TLT, well, down, of course. RSP, down. Dow, down. SMH, down. XLK, down. XLV, down. XLF, down. So there's a lot of weakness out there. But as I talked about at the very beginning of the show, it's not terrible everywhere. The biggest losers are crypto, Tesla, Cathie Wood, AMD, Bitcoin, regional banks, healthcare, the Russell, NVIDIA, the Dow Jones, and DAX. But what's up is what's really interesting. Volatility, people are paying for insurance. Silver's up by 10%. Man, WTF. It appears like the rest of the world is going risk on with emerging markets being up on the week. I think I forgot to talk about those. So if we go here to a weekly chart, 1 second here, EEM, emerging markets actually closed up by about 0.8 this week. FXI actually closed up as well by about 1.6. If we look at EWW or Mexico, man, this thing actually looks pretty good. Wants to run a test for the all-time high. So what this tells me is that people are rotating at the end of the quarter. And with earnings season kicking off in only about 1 week, I think we want to be very receptive to the idea that maybe we have to look beyond the US because there's a lot of money to be made. Gold pumped, oil pumped, energy up, Amazon up. So that's it for today's show. I want to leave you with a simple message, which is that we want to think about the warnings which are currently out there. If you want to hang out with me on Wednesday morning, I'm going to be away on Monday, Tuesday. Click on the video on the left-hand side. It is the schedule for Wednesday. If not, maybe you want to subscribe on the right-hand side to never miss another video. Thank you very much, and I wish you all the best of luck this week.